Trump unleashes punitive global tariffs. Discounted tariff for India. Trump hails friend Modi, imposes 27% tariff. India impact, setback or mixed bag. Tariff shake-up opportunity for India. Decoding Trump's tariff plan. That is a big focus on the NewsTrack.
Donald Trump has unleashed his tariff war on India and the world this morning. It's a mixed bag, according to the Indian government. Trump says he's levied discounted tariffs on India. New Delhi, on its part, says it is examining the implications as it continues to engage in talks with the United States. So what is the India impact? A big setback or an actual mixed bag? Or could this be a big opportunity?
Starting tomorrow, the United States will implement reciprocal tariffs on other nations.
Donald Trump and his reciprocal tariff rate card upended the global trade order on Wednesday. He erected new trade barriers around the world's largest economy, reversing decades of trade liberalization and globalization. As in the other Asian economies, markets in India reacted with alarm, only to recover later in trade. The revelation that sectors like pharmaceuticals, copper, energy and bullion and precious metals have been exempted from the tariffs energized investors. All these sectors are big contributors to the export kitty. Exporters in fact feel the tariffs could be an opportunity for the country.
I think India is at a much advantage. The opportunities for India will open, and this is the high time for the Indian exporters to increase their productions, quality and consistency in the supplies. I think the orders will start coming to India very soon.
The first phase of new tariffs on India will kick in from 5th April. The rest, 17%, will go into effect from April 10th. They will exclude vehicle and auto spare parts as well as steel and aluminium, which already attract 25% tariffs. Exporters feel the tariffs put India in a better position than its big competitors, China, Bangladesh, Vietnam and others.
26% is quite consumable by the exporters, because it is, this I am telling because the tariff imposed on the other countries, our competitive countries, China, Cambodia, Bangladesh, Sri Lanka, I mean, which are our competitive countries, this is much less. Whatever the advantage China had on the cheap raw material, that advantage is gone. I think this is good. India should be thankful to tariff, not to impose more.
The United States has been the largest export market for India in the past few years. But what also made India a prime target for the tit-for-tat tariffs is the huge trade surplus India enjoys with the United States. Meanwhile, Prime Minister Narendra Modi today landed in Bangkok for the BIMSTEC summit. In his absence, however, the Indian government is assessing the impact of the reciprocal tariffs imposed by the United States. In a statement issued this afternoon, the Commerce Ministry said it is carefully examining the implications of the various measures and is engaged with all stakeholders, including Indian industry and exporters. It added that the department is also studying the opportunities that may arise due to this new development in the US trade policy. According to the ministry, discussions are ongoing between Indian and US trade teams for the expeditious conclusion of a mutually beneficial, multi-sectoral bilateral trade agreement which covers a wide range of issues of mutual interest, including deepening supply chain integration.
यूएस का काम है, उनका अमेरिका फर्स्ट है ट्रम्प साहब का, तो मोदी जी के लिए इंडिया फर्स्ट है, अब उसकी हम लोग समीक्षा करेंगे, फिर क्या उसका असर पड़ेगा, कैसे उससे निपटना देखा जाएगा।
तो भारत में हर नागरिक कब तक पेंशन योजना के अंतर्गत आ जाएगा?
प्रयास है कि जल्द से जल्द लोगों को लाया जाए।
और सर आगे की रणनीति गवर्नमेंट की क्या होगी?
अब जरा टैरिफ देखा जाए, उसको फिर विचार किया जाए, फिर देखा जाएगा क्या करना होगा।
Prior to the imposition of tariffs, economists had projected a 10 to 30 basis points hit to India's GDP growth from the US tariffs, in part due to export restrictions and in part because of the economic uncertainty. Bureau Report, Business Today TV.
The world was on tenterhooks in anticipation of Trump's announcement. Hours later, there has been a geopolitical meltdown. Some countries have decided to hit back hard, others united to boost regional cooperation to counter Trump's plans. What will be the impact on global trade? Business Today TV decodes.
On Wednesday, President Donald Trump ignited a global trade firestorm, unveiling a sweeping reciprocal tariffs in the White House Rose Garden, dubbing it Liberation Day for U.S. trade. Markets worldwide convulsed Thursday as Trump's 10% baseline tariff on all imports, plus steeper rates like 34% on China, sent stocks tumbling and sparked fears of a trade war. The tariffs ranged from 10% to UK to 27% for India, 34% for China, and a massive 46% for export-dependent Vietnam. The penalties hitting allies and rivals alike reverse decades of trade liberalization, pushing US import taxes to an average of 22% as per Fitch ratings, the highest since 1910.
Okay, ready, everybody?
Beijing and Brussels have condemned the move, hinting at counterstrikes as their stock markets hit multi-month lows.
We have always been ready to negotiate with the United States to remove the remaining barriers to transatlantic trade. At the same time, we are prepared to respond. We are already finalizing the first package of countermeasures in response to tariffs on steel. And we're now preparing for further countermeasures to protect our interests and our businesses if negotiations fail.
美方打着对等的幌子
The US side, under the guise of reciprocity, imposed tariffs on products from many countries, including China. This seriously violates WTO rules and severely damages the rules-based multilateral trading system. China firmly opposes this and will take necessary measures to resolutely safeguard its legitimate interests.
关税战没有赢家
Economists have warned that tariffs could slow the global economy, raise the risk of recession, and could also cause a hit wicket by increasing living costs for the average American family by thousands of dollars. They feel the tariffs will push prices higher on thousands of everyday goods, from phones to food, and that will fuel inflation at a time when it's already uncomfortably persistent. Trump is meanwhile adamant the tariffs will liberate the US from the tyranny of friendly nations.
April 2nd, 2025 will forever be remembered as the day American industry was reborn, the day America's destiny was reclaimed, and the day that we began to make America wealthy again. We're going to make it wealthy, good and wealthy. For decades, our country has been looted, pillaged, raped, and plundered by nations near and far, both friend and foe alike.
Meanwhile, businesses are bracing for chaos as supply chains buckle under the new trade walls. With retaliation looming, the world watches to see if Trump's gamble reshapes trade or triggers economic turmoil. Bureau Report, Business Today TV.
So how will these new Trump tariffs impact India? How will they impact India's economic growth story? And what's likely to happen from here? To talk about this, I'm joined on the broadcast by Pranjal Bhandari, Chief India Economist at HSBC. I'm joined by Ashok Malik, partner at the Asia Group. Ashok happens to be in Washington this time. He's deeply plugged into the BJP ecosystem, having served in this government in different capacities. I have Harsh Madhusudan Gupta, Fund Manager, Ionic Wealth by Angel One. I have Daniel Block, Senior Editor, Foreign Affairs Magazine, joining us. I want to go across to Pranjal Bhandari first to try and make sense for all those watching at this time how these new Trump tariffs impact their lives. So we'll come to the impact on Indian exporters next, but just from the perspective of the viewer for India today, what Trump has done, how does it change my life now?
Well, yeah, like sitting in India, we sell a lot of goods to the US, and now, we will be charged an extra tax on that, which is higher than what we were charged before. And somebody will have to bear that pain. It can either be the Indian producer of that good, or it can be the American consumer of that good, or it can be a mix of the two. Our general sense is that the impact on India from this, at least in the current year, the FY26, the fiscal year that has just started, will basically mean lower GDP growth than would have been the case if Trump had not increased these tariffs. If you do a very simple calculation, my estimates are that India's GDP growth could be about 0.5 percentage points lower than they could have been. So, for example, I was expecting growth to be 6.5%, but it could be 6% now, or maybe slightly lower. So there's going to be a growth drag on the back of all of this. Of course, we can turn around and say that, look, there's a growth drag, but we can take care of it. We can do other things to boost growth. For example, the RBI, the central bank, has been cutting rates, and that's great for growth. So we will counter this. But the truth is that the direct impact, this 0.5 percentage points that I spoke about, is not the only drag. There's also an indirect drag, which we have to be very careful about, which is happening because it's likely that with all of these tariffs, because there have been tariffs across a huge number of countries, global growth volumes will slow. Generally speaking, global capex will slow, global growth will slow, and there'll be this big indirect impact as well. So one way or the other, my sense is that GDP growth in India is going to be lower in FY26. Much more than we had thought just, say, day before yesterday.
Pranjal, explain from your perspective the likely impact on different sectors of the Indian economy, particularly those that export to the US. I was reading research reports that say that this is extremely negative for Indian IT behemoths like TCS, like Infosys, like Tech Mahindra and the others, and that this is also bad for auto ancillary companies which are exporting to the United States because those are likely to now have to deal with the wrath of these Trump tariffs. So what impact does it have on them, and how could it impact their fortunes and the fortunes of those who work with these companies?
So this is a very complex question, and there are many winners and losers, but it's also very fluid. We can discuss a set of winners and losers today, but if any changes are made, that set could completely change tomorrow. So from the news that we got yesterday, everybody was fearing that pharmaceutical companies will have a sort of tough time because we are big exporters of, pharma, drugs and medicines to the United States. And if there are tariffs on that industry could get hurt. But overnight, that was exempted. So today, the pharma stocks did very well. The pharma sector is sort of pretty happy. But on the other hand, there are many other sectors, from textiles to autos to agri to chemicals, which will now face higher tariffs, than we thought they would just 48 hours ago. And I think that is a problem. But all of this can completely change 5 months down the line. It's possible that in 5 months' time, a new tariff is imposed on pharma, and tariffs on textiles, which were imposed day before yesterday, are actually brought down. And then the entire mix will change. So I think this is very fluid. And what this basically means is there's a lot of uncertainty out there. So people who want to do investments in capex on pharma or textile, they'll all sit back. Nobody will do anything because things are changing, quite rapidly with the stroke of a pen. Something.
So what's your advice to Indian consumers? Because we're being told by Trump and indications from the government that import duties on different products like cars, particularly EVs, is likely to come down. So what does that mean for somebody who might be looking to purchase a car in this financial? Should he just wait till the time tariffs come down? Because that would make, for example, an imported Tesla or a BYD or whichever other car much cheaper than it is right now.
Look, so two implications for consumers. I think number one is that after a very long time, we are proactively out there cutting import tariffs. You know, India was one of the highest tariff nations in the world, and in a way, we've been called out for that, and we're sort of like changing track. We are trying to cut tariffs. So over time, you know, while we do a negotiation with the US, we may end up cutting tariffs on many of these, say, for example, US automobiles that come into India. So yes, consumers can sort of think about that. That's part one. The second way I think a consumer can benefit, my sense, is that inflation is likely to be actually pretty low going forward. You know, we're looking at a world in which growth is lower. Oil prices have tumbled dramatically in the last 24 hours from like $75 to, you know, $70 per barrel. I think all of this will put a lid on inflation, which has been a problem for the last 2 years, which is another thing which is going to be great for consumers. So that's a very short-term view that, yes, consumers will benefit from slightly better purchasing power and access to cheaper goods. But having said that, overall growth, because investments are going to be pretty low, exporting is going to be quite uncertainty, overall growth is going to be lower in this year.
Okay, stay with me, Pranjal. I want to go across to Ashok Malik. He's on the phone line talking to different voices in the Indian government. Mr. Malik, your sense of how the Indian government is beyond what we've seen in the official statements put out by the Commerce Ministry. How is the Modi Sarkar viewing these tariffs? We've seen a strong, aggressive, visible pushback from countries like Canada. There's talk of a pushback from the EU. The Indian government seems to be trying to get on the right side of Trump despite him punching us in the face with these tariffs.
Rahul, three things. One, I agree with Pranjal that there is an overall disruption to the global economy which you can't really calculate right now. It's certainly there. And there will be a global slowdown. It could be all at once, or it could be like dominoes, one country after another. That is certainly going to happen. That is the absolute impact. The relative impact, there are sectors in India that will suffer. There are also opportunities that have been created for us, at least in the immediate run, in the immediate future. For example, ready-made garments. Bangladesh and Sri Lanka have been tariffed way ahead of India. If you look at iPhones and electronics, Vietnam, China both have very high tariffs. India is not the cheapest place to produce an iPhone, but its tariffs are now lower. So some more production lines can move here. Then if you look at pharma, we've dodged a bullet so far, but the bullet will come, I know that. If you look at rice, we have substantial quantities of rice that we can export. Both Thailand and Bangladesh and Pakistan have higher tariffs than we do. So there are some immediate opportunities, while there are certainly headwinds as well. Why has the government in Delhi been relatively quiet? Quite honestly, if you speak to folks in Washington, they acknowledge that Indian diplomacy has managed to get in front of the line to negotiate a trade agreement with Washington, which Washington can then showcase to the rest of the world as an example of how its attempts at using tariffs to get trade concessions has worked. Several countries, about 5 or 6 countries, are talking to Washington right now about tariff negotiations. There's only one country which is in front of the line for a full-fledged trade deal, which is India, which will certainly give us some breathing space. It will not solve all our problems, not at all, because we are living in a very turbulent world. And Trump
but even with that bilateral trade deal, Ashok, the fact is that the United States putting pressure on an overall reduction. If you read the US Trade Representative's report, he's objecting to non-tariff barriers in India, like the minimum support price for farm produce. Now, no government, Modi Sarkar or any other government, can dare not touch MSP. It's politically suicidal now, just to make Trump happy. We can't commit political hierarchy.
You know, even the manner in which the tariff figure for each country has been arrived at, the formula that has been calculated is a very dodgy formula. It's the economics equivalent of the Duckworth-Lewis system, if you ask me. You know, you take the trade deficit, then you take the total exports, and you just use that to come up with a number. I agree with all of that, but if we do have a trade agreement, and talks in the trade agreement have gone fairly well so far. I understand in either end April or May there's a next round. It will give us some breathing space in a world where many of our competitors are actually worse off than we are. I'm not saying we are very well off. I'm just saying we are worse off than many of our competitors. Let's recognize that.
Daniel Block, what's been the reaction in the United States? I was reading a lot of commentary across Bloomberg, Wall Street Journal, the Financial Times, The Economist. They're just convinced that this is an absolutely disastrous idea and Trump is leading the United States' economy and global growth towards economic ruin and the prospects of a recession now much higher than they were in the past.
That does seem to be the consensus among economists, among manufacturers, and among many different types of consumer groups. Now, the caveat is it's too early to say. We don't have any polls yet that look at how the American public thinks about the tariffs that Trump has just imposed. There are reasons, though, to suspect that Americans are not going to be terribly friendly. And that's polls that have come out before the tariff announcements show that Americans tend to be supportive of free trade, more supportive now, actually, in many ways than they were in the past. And to put it mildly, the set of tariffs that Trump announced are antithetical to free trade. So if that holds, we'll see most people oppose it. The other reason to suspect that most Americans are going to be unhappy with it is that the predictions economists have made that you just laid out about a possible recession, about inflation, there's reason to think that that will come true, that those will come true, particularly inflation. So as some of the panelists were saying earlier, the tariffs will likely be paid, at least in part, by American consumers, companies that are importing goods from other countries here. And certainly products that were made by foreign companies in foreign countries are now going to be more expensive. Those companies are going to pass off the increased costs in large part onto American consumers. That's what tends to have happened in the past. And as we know, in the United States and countries around the world, voters, people, they really don't like inflation. So that would be a reason to expect that it won't be popular here in America.
Arun Kumar Sharma is a senior non-resident fellow, chair on India and emerging Asia economies at CSIS. Explain, Mr. Sharma, why you feel that Trump's idea that this is going to lead to manufacturing coming back to the United States and America again becoming an industrial superpower. Why is that unlikely to materialize, you think?
Yes. So the answer is fairly straightforward, that setting up manufacturing is an entirely different process simply than the lack of a free trade opportunity. Somebody setting up a auto plant, setting up a chemicals plant, it takes a year, 2 years, 3 years, number one. Number two, the fact that in order to move production, you also need to have other scale economies in the country where you're moving production to. So you just take the garments industry, for example. The reason Bangladesh, Thailand, India, multiple Asian economies are competitive in the garment sector is because of low wages. Just because tariffs are lower and because you have higher tariffs, it does not mean that you will get the same low wages from American workers by putting up a plant there. So just because it's more difficult to export garments from here, it's not going to be any cheaper to produce garments in the United States, paying American
No, but Trump's argument, or when I spoke to, say, Secretary Lutnick during the conclave, his argument was, with a lot of automation and technology now and the proliferation of artificial intelligence, you need fewer employees, and therefore you can do manufacturing through robotics, through technology at a scale which wouldn't have been possible earlier. So this argument that labor in America is costlier isn't something that they believe is going to hold back manufacturing coming into the US, especially high-end manufacturing.
Yeah, see, the thing is very straightforward. If America wanted manufacturing in United States, it would have done it independently. There is nothing preventing American companies or foreign companies putting up manufacturing in the United States today. And to the extent and for the sectors it makes sense, foreign investment in America is even continuing today. So the impact that tariffs will have on moving manufacturing en masse is highly unlikely. Yes, there could be some cases where somebody was contemplating a move to the United States or an investment in the United States. That may become more economically feasible because now it is cheaper to get goods to the market from a US base than a foreign base. But that will be the limited, I would say, impact of
tariffs on moving manufacturing.
Since you're in the United States and you're understanding what's happening both in India and in DC, what's your best sense of by when you think this trade agreement, this bilateral trade agreement is likely? We've set a target for fall, which is say September to December. Is it likely to happen before that? Because there's some very serious sticking points, like for example, America's expectation that India can reduce tariffs on agricultural imports, which frankly from the Modi Sarkar's perspective is very difficult, and as is the idea that they want MSP to be tweaked with. Is that really just posturing, putting India's negotiators under pressure, or does Trump actually think that Modi ji will do this?
No, I think it's, Mr. Trump, his long history, he's a very good and very thoughtful, I would say, strategist when it comes to commercial matter. He is a businessman first and foremost, and certainly I think this is an opening position, and that has been proved multiple times, including in the tariff discussion so far. He has gone and made some announcements, has pulled back because it's technical. And even if you look at the analytically at the tariff composition now, things that are politically and from a business perspective critical to America have been actually exempted. Pharma is an example, critical minerals is another example. Things that really matter, he is not completely inflexible on. So my sense is that I think there will be a strong effort on both sides to arrive at a trade deal. The United States, like any other country pushing for its national interest, will try to get the best deal. And I think the Indian government is going to do the same. And the hope is that given the approach of both countries, if you notice the words used, Mr. Trump used very carefully the words that Prime Minister's my good friend. And India used the words very carefully that this is not a setback, it's only a mixed bag. I think both these are, high-level indicators that there is strong interest on the part of both entities to find a balance. But I think it's also, I would say, unrealistic to assume that just because of this friendship, the United States is going to give India a completely free pass against the rest of the world. That's not going to happen.
He said that Prime Minister Modi is a friend of mine, but India is not treating us right. That's the full sentence. So he's also, he's giving you a compliment and a rose from one side and punching you in the face from the other. But that's Trump, and you're calling this a negotiating position. I want to spend some time with Harsh Madhusudan Gupta on why this may be net positive for India. The fact that there's a lot of regulatory cholesterol in the Indian system, and no matter whether it happens under Trump's duress or the IMF's pressure, if we can ease out some of that regulatory cholesterol, explain to our viewers why you think that this might actually be great for everyone watching and for the India story in the medium to long run.
Rahul, first of all, a couple of things. I think on your television right now, you're seeing India's tariffs 52%, reciprocal tariffs 26%. As Ashok hinted earlier, 52% has got nothing to do with India's tariffs.
Correct.
This number has been brought out by saying what is India's export surplus in goods to America divided by India's total exports. This has got absolutely nothing to do with India's tariffs. So the word reciprocal is a big misnomer here. It is the US used the term new golden rule for the new golden age, right? So this is nothing to do with golden rule. Theoretically, even if India and America both had zero tariffs on each other, and Indian exports were more competitive and therefore had a bilateral trade surplus of, let's say, $50 or $100 billion, that bilateral trade surplus is a problem for Donald Trump. So it's important to understand that this is not that India has to somehow separately reduce its protectionist or regulatory cholesterol. We have to do that for our own reasons. This is a separate discussion, especially on the regulatory side. Now on protectionism more broadly, let us see, for example, India actually has lower weighted applied tariffs globally than South Korea. So this idea, this fantasy that India is somehow uniquely protectionist, I think is completely outdated. All Indian industries are completely open. I mean, people talk about India's automotive industry being protectionist. India's two biggest car makers are South Korean and Japanese respectively. The problem
but their problem is not about manufacturing by Toyota and by Hyundai in India. The problem is that Trump's friend Musk can't sell his Teslas because of how high our import duties is, which is why it's become such a major topic of conversation in the Trump ecosystem.
Import duties are equally high for the Japanese and the Koreans as well. The only requirement to get rid of those import duties is to open a plant in India. So let us be very clear that there is no element of reciprocity in this, what was announced yesterday night India time. Number three, I fully agree that this is something very bullish for India in the long term, because as Ashok also mentioned, some other countries have been slapped with a higher tariff, although I strongly believe none of these numbers are likely to stay. There are numbers of 70%, 18%, 90% tariffs on countries like Vietnam. They're definitely going to be renegotiated, and Trump himself hinted prime ministers and presidents and kings and queens coming to talk to him, which is why the non-10% tariffs are going to be applied on April 9th and not April 5th. But my one final point here is the broad idea of Indian geopolitics or economics, that we will do with the US what the Chinese did with the US against the Soviets, that is asymmetrically export to them in the second Cold War. That thing got a major Bayesian downgrade as an idea yesterday night. The idea that India can grow on the coattails of Cold War 2.0 and America will accept asymmetrical surpluses, that is gone. So let us understand what it is. This is not about reciprocal tariffs. This is about America saying we are not going to take surplus exports from any major economy, friend or foe, in Donald Trump's language. If that is the case, let us understand, I am in support of any trade deal or interim trade deal happening between India and US, or India and EU for that matter, in the coming months. But remember, Donald Trump is the person who renegotiated NAFTA and made it USMCA, and he's now tearing it up. So his successor, J.D. Vance, is basically Trump on steroids. So let us be very clear that the idea that India can somehow do again what China did is difficult. We need to have our own views on software industrial policy, on defense industrial policy, and we need to get our own house in order. We are getting defense to GDP down below 2% for the last 5 years. It reduces our negotiating hand, and we need to be a bit more aggressive in negotiations with the US. It was fine as a first step to lay it low, but I believe that clearly all of that, behind the scenes, a lot of stuff is happening, which Ashok and Arun know probably better. But yesterday's announcements, as the initial announcement, was based purely on a simple formula of export surpluses. All appeasement led to absolutely no difference for those 60 countries. So India,
saying appeasement led to no difference. The thinking in the government, though, seems to be when you've got the schoolyard bully on a rampage in the football field, it's better to be on the side, not get straight in his way. Let him calm down and find some way of being able to do business with him. Pranjal Bhandari, explain what impact do you think this may have on India in the long run? If this is used as an opportunity, and we heard it from the finance minister during the union budget that she wanted to take away some of the regulatory cholesterol. If that does happen, explain why you think this may not be such a bad idea for India in the long run.
Yeah, so look, I started by saying that I think the next year, FY26, is going to be not that great for growth. We're going to see lower growth. But, if we play our cards right, my sense is that, over time, we can actually, benefit from big changes that are happening globally. And I say that because I think for the first time in a long time, I'm seeing India doing a few reforms that I feel it was not doing in the past. 4 things in particular. It's been cutting some of the tariff rates, bringing down some of the non-tariff barriers a little more than it was in the past. Number 2, it's reaching out to different countries, trying to hasten trade agreements, not just the US, but also EU, which is sort of like a fresh way of thinking about it. Number 3, it actually seems to be a little more open about regional FDI coming into India, which I think can be a big positive in the medium term. And number 4, on the rupee. My sense is that the rupee, at least in the last couple of months, has been a lot more market-driven, a lot more flexible than it was for a long time, which I think is good for sort of long-term fundamentals. So I think these 4 important reforms are happening. And if we can continue with these, I think once the storm settles, India could come out on the right side. One area I'm really looking out for is basically FDI inflows into India in mid-tech sectors, labor-intensive sectors like textile, footwear, handbags. I think these are areas where we have punched below our weight. And I think if we continue to do these reforms, and a big sort of area to watch would be FDI, we start seeing regional FDI coming into India.
No, but can I Ashok Malik counter to say that the need to do away with regulatory cholesterol is something which everybody would accept. When you speak to any minister, any bureaucrat, any top government function, they'll all say it. But we haven't been able to actually get it done. There's a lot of talk. Between that talk and actually making India an easier place to do business, they're two different things.
But Rahul, I completely agree with you, but that has nothing to do with Trump and his tariffs. If we need to be more of a manufacturing economy, if we need to export more, we need to enhance our own domestic competitiveness. For that, we need a more sensible interpretation of GST. GST is a good idea, interpreted horribly. For that, we need factor market reforms. For that, we need deregulation, not just at the union government level, but at the state level, all of which has been discussed and promised even this year. We need to do all of that irrespective of Trump. So it's not that before the Trump tariffs, we were exporting lots of stuff to the US. We were underperforming even then because of our own shortcomings. So that has nothing to do with Trump's tariffs.
Okay, Harsh Madhusudan Gupta, talk to our viewers about how you think the rest of the world is likely to operate. We've already seen statements from China, Japan, South Korea of these countries wanting to act more in concert. We're also seeing the EU wanting to push back. So what's the most likely geo-economic fallout of what Trump is trying to do in the rest of the economic powers?
Out is, and in fact, I wrote a piece in Business Today in January called The End of American Financial Exceptionalism. So the dollar has been on a cyclical tear for the last 14, 15 years. And this is finally the nail in the coffin. I think nobody yesterday was expecting these headline numbers, which Donald Trump basically showed in the Rose Garden White House. And despite that, for example, the dollar index is down by 2-3% today. So what has happened basically is we are likely to see the Magnificent Seven, the FANGs, the big tech US valuations, and more broadly, the dollar get weaker in the coming years. And that's likely to be very good for capital flows into emerging markets like India. Because anyways, the cycle was due to turn. And this may be the final trigger. Let's understand that Donald Trump's election was the final thing that blew up the dollar. And this is now a reversal very rapidly, very similar to his first inauguration in 2017. So I think geoeconomically, America has decided that this is, in economics, is called the Griffin's dilemma. It cannot take the shoulder of the global demand on its shoulders anymore. It wants to extricate itself from the system, however imperfectly, which also has implications for the Europeans becoming more autonomous in security. America wants that, but if Europe becomes more autonomous in security, Europe is going to eventually become more confrontational with the US big tech. Sure. If Taiwan and South Korea and Japan feel that the Trump security guarantee is not worth the paper it is written on, you might see a Japanese nuke in 3-4 years. If India feels that despite any interim trade deal, it's not really benefiting from America beyond a point, you might see India also taking some steps, which is right now trying to reverse. For example, the Google tax 6% online levy, which we at least floated in the public sphere to withdraw kind of, as part of the negotiations. It's not been formally done. So all of the US financial reserve currency status, the US security umbrella, and the US trade deficit being asymmetrical, all three of them were intricately interlinked as part of a triad. So Trump cannot remove one of them or two of them with security umbrella and then not want the dollar to not fall, but maybe he and his team, for example, Scott Bessent, they do want Stephen Miran, they want the dollar to weaken, not in a structural sense, but in a cyclical sense, so that some manufacturing comes back. However, that is likely to be unlike...
No, but I want Arun Kumar Sharma to spend some time talking about how one is what Trump is thinking, the other is how is the rest of the world, particularly China, likely to react, the EU. So explain how you see global trade as we know it change and the coming together of countries. You won't typically expect China, South Korea, Japan, given their animosity, to come together and act in concert, but Trump is creating these unique alliances or these unique situations where groupings are happening just on the basis of mutual interest and survival instinct. Mr. Sharma?
Yes, so I think the 2 or 3 trends are clear. The first one is that there is a concerted US effort, as other panelists were saying, to release the burden they have, the fiscal and the overall, I would say, financial burden on the economy to support other countries and have a more domestic-focused approach. But that comes at a cost of the US position geopolitically, and it is already, the world is moving towards a more multipolar world. It moved from a bipolar world to a more unipolar world in '91 after the Soviet Union collapse, and now it's, I think, has been moving to a more multipolar world with the emergence of China, and then more other countries, with the formation of BRICS, and then other institutions like the AIIB and others. And I think that this is going to accelerate that trend. That's point number one. Point number two is that I think from a purely trade perspective, I think it's going to give another major fillip to the demise of the WTO, which was hoping for a more globalized environment, to a more sort of inefficient but necessary regional trade environment, which is full of sort of people cutting deals with each other in the form of preferential trade agreements. We are already talking to the United States. Other people are going to be talking to other people. The third thing that is happening is that given the nature of the world's manufacturing today, it's complete. There is no such thing as national manufacturing. People are importing parts, supply chain linkages, markets, everything is global today. And that basically means what tariffs does is makes this life more complicated. Today I'm buying from 35 suppliers in 14 countries. How does these new tariff equations work for me? So I think a lot of people...
Especially when products go back and forth across boundaries multiple times, as is the case particularly in countries like the United States, Mexico, Canada, where there's a lot of back and forth before the ultimate product is ready. We've had an insightful conversation. You've heard different, very sharp perspectives to try and give you a sense of what to expect and also what happens from here. Ashok Malik, Harsh Gupta, Arun Kumar Sharma, Danielle Block and Pranjal Bhandari for joining me on the NewsTrack. Thank you very much.